So today we're gonna talk about how to become financially free. What does that mean? So when we are debt free, what does debt means? So when we look up at the dictionary, you can go to the freedictionary.com, and the definition is for debt. It says something that we owe, such as money, goods, or services, an obligation or liability to pay or render something to someone else. The condition of owing. Financial instruments such bonds, mortgages, and loans that represent a claim to payments and rights of creditorship. A moral or legal obligation to make reparations or undergo punishment for committing an offense if we're talking about criminal debt to society. So those are the definitions of debt. Now, when we are talking about being financially free or debt free, that means that we don't owe. That means that we will work on a plan. We will make a written financial plan where our goal is to not have any financial credit, any debt, anything that we need to pay to some other person than ourselves. That is what is financially free or debt free. So now that we understood the definition, then we're gonna go to um, how. Now the other terms that are used usually also when people talk about riches and wealthy, we think that they mean the same thing. But when we go and we go to the dictionary and we gonna go and look about what they say about being rich. What's the meaning of being rich? And it says is having abundant possession or especially material wealth. So that's the definition of rich, that we have abundant possessions. That maybe we have a lot of things, maybe we have a lot of money, maybe we have a lot of assets, maybe we have a lot of homes. So that makes us look rich or be rich because we had material wealth. Something material means something that you can touch, something that you can, buy and sell. So like a house, like a car, anything that is touchable, anything that you have in your possession. That's being rich. So now wealthy, the definition according to Merriam-Webster dictionary is having wealth, being very affluent, characterized by abundance. That means they're not talking about your possessions. They're not talking about any material things that you can touch. They're not talking about your house or your cars or anything like that. They're talking about having wealth, very affluent. That means that you have a lot of money, that you have deep pocketed, you are loaded with money, you have you're very well off. That means that you are not poor. You're, it says rich, wealthy, affluent, opulent are the synonymous of wealthy. So that's what it means. One is rich, which means you have abundant possessions of material things or wealth. And wealthy means you are wealthy, you are opulent, you have a lot of money, you are not penniless, and you are affluent. Affluent means that people know that you have money, right? So you're wealthy. So now that we understood the definitions of rich, wealthy, and debt free and financially free, now let's go and use those for our advantage. So, for how can we use those for our advantage? Well, one of the things is if you become your own bank. So, how can you become your own bank? And well, there is different ways you can become your own bank, but today we're going to talk about one way of doing that. And that means that instead of paying to the bank the fees that you're probably paying right now for borrowing money, you're gonna pay that money back to yourself using a financial vehicle. What is the financial vehicle you're gonna use? It's gonna be life insurance product, and the specific product will be whole life insurance. And how do you use that? Well, as you know, life insurance is a policy, and there is different types of life insurance, but in this video we're talking about whole life insurance to be used as a product to be able to be your own bank. So the way we're going to use it is that, as you know, the whole life insurance has two aspects of the policy. One aspect is the policy itself to insure your life, and the second aspect of the second part of the policy is for you to save money on the side, and that's called cash value. Is That's the cash value side of the policy. So when you have the policy in itself, and on the other hand you have the cash value where you're accumulating your money that you are saving, just like if you were saving the money in any checking account at any bank and anywhere you want to put that money. So so when so how can we use the money, or how are we gonna be our own bank using the whole life insurance policy? So this is how you're gonna do it. What you're gonna do is, let's pretend we have a policy. We have a 100,000 policy on the life insurance side, and then we have already 20,000 grand saved in the cash value side of the policy. So now we want to buy a house, but we don't have any savings. We don't have any money, or that's what we think most of the time. But then we remember we have a cash value policy on the side, and then we take a look at that and we realize we have $20,000 saved in that policy. So what we do is we call our agent and we say, I want to buy a house and I want to use the cash value money on the side of the policy. I want to borrow it. I want to borrow against the policy. And so, they'll tell you what you need to do. They'll send you the form that you have to fill out. You sign, you return whatever paperwork has to be done. And then now you get your check. So when you get your check, you borrow against your policy. So because you want to treat yourself as you were treating or making some kind of banking arrangement, or going to the bank and getting this money, so you're going to pay yourself 3% or 6% on that money that you just borrow on your policy. So instead of returning 20,000 rand just by itself back to the policy, once you pay it off, you're gonna pay 3% or 6% to the policy. So let's say if we return back 3% from the 20, that will be $600 more. So now we're gonna have a balance of 20,600. If we return at 6% on the policy, then we're gonna have 2,100. I'm sorry, 20 plus 2,100 with 200. Yeah, $2,100 with $200. Well, 21 and $200. That's what it is. Yes, I'm sorry. So once you pay to yourself, you know that you pay at $1,200 to your own bank because you borrow from your own funding, which was your $20,000 that was sitting on the cash value side of your policy. So if you keep doing that, you keep putting more money, stashing more money there, just like you do at any bank account that you have for checking or savings, and then you just let it grow, 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 grow. Now you have your house. Your house hopefully is gaining some value and some equity. So you have some more money, being accumulated there. That's another way of saving through your equity. And then you have your policy that you're still putting money there. You're still letting it grow. And then whenever you want to use it for buying a new car, buying another house, or putting money for buying business or anything like that, you do the same thing. So you pay to yourself the interest rate that any bank will be charging you if you were going to a bank to borrow that money. So instead of going to the bank, you just use your insurance policy, your whole life insurance policy with cash value on the side, and you use that money that is sitting right there doing nothing, and you start investing it and then pay that money back with interest. And that's how you're banking on yourself for yourself. And you can use that banking system as as long as you want, because it's your own money and it's those are your own funds. And you every time you make a loan against your policy, you are going to pay to yourself back interest, just like if you were dealing with a regular banker or with a regular lender. So that's the video today. It's about using insurance vehicle to be able to be your own bank. So I hope if that was helpful. You can follow us in social media, Blanca Professional Services. You can go to our website, blancaprofessionalservice.com. You can give us a call if you like this video, 1-800-637-5833, and you want to know more about how become financially free. We give you a 15-minute free consultation where if you are, if you have a lot of debt, we can create a financial roadmap or a financial analysis where we can put all the different debt that you have, all the credit cards, everything you have. We create a plan for you that you can follow to start getting out of debt and become a financial free person. So if you need to do that, then you can give us a call, 1-800-637-5833. So we hope to see you in the next video, and let us know if you like this video, and or let us know if you didn't like it. And so either way, we are happy to hear from you. Thank you so much for your time.